One new IRS schedule can decide whether a senior taxpayer actually claims the new deduction of up to $6,000. This is not a new monthly Social Security check. It is not a stimulus payment. It is not cash that every senior automatically receives. It is a federal income tax deduction for certain people age 65 or older, and the central item to watch is Schedule 1A, Additional Deductions. If that schedule is missed, the deduction may be missed too. As of June 26, 2026, the IRS says the enhanced senior deduction applies for tax years 2025 through 2028, may be up to $6,000 per eligible person, and may be up to $12,000 for a married couple filing jointly if both spouses qualify. So in this video, we are going to make this simple. We will explain what the deduction really is, who can claim it, what income limit can reduce it, why Schedule 1A matters, and what to do if you already filed and think you missed it. There's also one safety warning you need to hear, because scams around refunds, credits, and new deductions are already a real risk. Welcome to USALIFE Bulletin, where we explain important USA updates in clear and simple words. USALIFE Bulletin is an independent information channel and is not part of any government agency. This video gives general information and is not personal tax or financial advice. Your own result can depend on your income, filing status, records, and tax return. Here is the main reveal. The IRS calls this the enhanced deduction for seniors. It comes from the One Big Beautiful Bill Act provisions for individuals and workers. The basic rule is simple. For tax years 2025 through 2028, a person who is age 65 or older may claim an additional $6,000 deduction if they meet the other rules. A qualifying married couple can claim $12,000 if both spouses qualify. But the deduction starts to phase out when modified adjusted gross income is over $75,000 for single filers or $150,000 for joint filers. That last part is very important. The $6,000 is a maximum deduction. It is not a guaranteed refund. A deduction lowers the amount of income that is taxed. A credit directly lowers the tax bill. A refund happens only when your payments, withholding, and credits are more than the tax you owe. So when someone says seniors can claim $6,000, the safe way to understand it is this. Eligible seniors may be able to reduce taxable income by up to $6,000. That may lower the tax owed, it may increase a refund, but it does not create a $6,000 payment for everyone. Let us make this even simpler. Think of your tax return like a file cabinet. Your income goes in one drawer. Your deductions go in another drawer. Your credits go in another drawer. The new Schedule 1A is like a new folder in that cabinet. It is where certain new deductions are claimed, including the enhanced deduction for seniors. If your tax return does not include the correct folder, the deduction may not be shown in the right place. The IRS says Schedule 1A is used for new deductions, including no tax on tips, no tax on overtime, car loan interest, and the enhanced deduction for seniors. Now, who should pay the closest attention? First, pay attention if you are age 65 or older by the last day of the tax year. For the 2025 tax year, the IRS instructions describe this as being born before January 2, 1961. That date matters because tax rules often look at your age at the end of the tax year, not just your age today. Second, pay attention if you are married. The IRS says married individuals must file jointly to claim this deduction. If you are married filing separately, this is a major issue to review before assuming you qualify. Filing status can change the entire answer. Third, pay attention if both spouses are 65 or older. If both spouses qualify and they file jointly, the maximum enhanced senior deduction can be $12,000, not just $6,000, but both people must meet the requirements for their own part. Fourth, pay attention if your income is near the phase-out level. If your modified adjusted gross income is above $75,000 as a single filer, or above $150,000 as a joint filer, the deduction may be reduced. That means two people can both be over 65, but one may receive the full deduction and another may receive a smaller amount. Fifth, pay attention if you itemize deductions. Some seniors may think this only helps people who take the standard deduction. But the IRS says the enhanced senior deduction can be available whether an eligible taxpayer claims the standard deduction or itemizes. And who is not affected? If you are under 65 for the tax year, this senior deduction does not apply to you for that year. If you do not meet the Social Security number requirement, that can block the claim. If you are married and do not file jointly, that can also block the claim. And if your income is high enough, the deduction may be reduced or fully phased out. This is why the headline sounds broad, but the rule is more specific. Another point needs to be clear. This deduction does not change your monthly Social Security payment. It does not increase your SSA check. It affects your federal income tax return. Some people receiving Social Security also file taxes. Some do not owe federal income tax. Some have pensions, IRA withdrawals, wages, interest, or other income. Your tax result depends on the full return, not on age alone. Let us look at a simple example. Imagine a woman named Maria. This is only an example. Maria is 68 years old. She receives Social Security and also has a small pension and some part-time wages. She usually uses Form 1040-SR because the larger print is easier for her to read. She takes the standard deduction and she has a valid Social Security number. When Maria prepares her 2025 tax return, she sees a question in the tax software about whether she was born before January 2nd, 1961. She answers yes. Then the software asks questions connected to Schedule 1A. If Maria qualifies, the enhanced senior deduction may reduce her taxable income by up to $6,000. If her income is not above the phase-out level, she may receive the full amount. If her income is above the phase-out level, it may be reduced. If she already has very little taxable income, the deduction may not create a large refund. The correct result depends on the full return. But the key lesson is simple. Maria did not treat the title as proof. She checked the form, checked her age, checked her filing status, and used the IRS rules. Now consider what happens if Maria already filed her return and later realizes Schedule 1A was not included. She should not panic. The IRS says taxpayers can file Form 1040-X to amend a Form 1040, 1040-SR, or 1040-NR, and amended returns can be filed electronically for the current or 2 prior tax periods through tax software. The IRS also says a complete amended return should include the corrected return and any supporting documents or changed forms and schedules. This does not mean everyone should rush to amend. If you already filed, first review your return. Look for Schedule 1A. Look for the line that relates to the enhanced deduction for seniors. Look at whether your tax software or preparer included it. If you used a tax preparer, ask them to review it. If you used free help, contact the same program if possible. Amending a return can be useful when something was missed, but it should be done carefully. There is another useful document for seniors, Publication 554, Tax Guide for Seniors. The IRS says Publication 554 is for use in preparing 2025 returns and includes the enhanced deduction for seniors, the standard deduction amounts, Form 1040-SR information, and senior tax topics. It also explains that Form 1040-SR is available for people age 65 or older and generally mirrors Form 1040, but with larger text and helpful tips. This matters because many seniors do not need a complicated strategy. They need the correct return, the correct schedule, and the correct records. The overlooked detail is not a secret government payment. The overlooked detail is the place where the deduction is claimed. Here is what you can do. Step 1. Check your age for the tax year, not just your age today. For the 2025 tax year, ask whether you were 65 or older by the end of 2025. If you are preparing a 2026 return later, check your age for the end of 2026. The rule is tied to the tax year. Step 2. Check your filing status. If you are single, head of household, or qualifying surviving spouse, your return will be evaluated under the rules for that status. If you are married, pay special attention because the IRS says married taxpayers must file jointly to claim the enhanced senior deduction. Do not assume your usual filing status is best without checking the result. Step 3. Gather your records before filing. That includes your Social Security benefit statement if you receive one, pension forms, retirement account forms, wage statements, interest forms, and any other income records. Also, keep records showing your correct Social Security number information. The IRS says the taxpayer and the spouse claiming the deduction on a joint return must have a valid Social Security number for this deduction. Step 4. Look for Schedule 1A. If you use software, do not just click through quickly. Read the age questions, read the filing status questions, read the new deductions section. If you use a preparer, ask one direct question. Did my return include Schedule 1A for the enhanced senior deduction? That simple question can prevent a big oversight. Step 5. Check the income phaseout. The maximum $6,000 deduction may be reduced when modified adjusted gross income goes above $75,000 for single filers or $150,000 for married couples filing jointly. Do not use your bank balance to guess. Do not use your gross Social Security number only. The return calculation matters. Step 6. If you already filed, review before amending. If the deduction was missed and you were eligible, ask a qualified preparer, IRS Free Tax Help Program, or trusted tax professional about Form 1040-X. The IRS says amended return status can generally be checked around 3 weeks after submitting it, and Form 1040-X processing generally takes 8 to 12 weeks, though some cases can take up to 16 weeks. You may be thinking, I do not use computers. That is okay. The IRS has free tax help options. The Volunteer Income Tax Assistance Program and the Tax Counseling for the Elderly Program offer free basic tax return preparation for qualified people. The IRS says the TCE program is especially for people age 60 or older and focuses on pensions and retirement-related issues. You may also be thinking, English is not my first language. Do not guess on a tax return because of language pressure. Use official help, a qualified preparer, or a trusted family member only if you are comfortable. But do not put your Social Security number, tax details, bank information, or date of birth in a YouTube comment. No channel, including Use a Life Bulletin, should ask you to post that information publicly. You may be thinking, I already receive Social Security, so do I automatically qualify? No. Receiving Social Security does not automatically mean you qualify for this deduction. The rule is about age, tax year, filing status, Social Security number requirements, income limits, and the return itself. You may be thinking, I did not owe tax, so does this help me? Maybe not. A deduction lowers taxable income. If your taxable income was already very low, the deduction may not create a new refund, but you should still understand the rule because your income may change in a future year. You may be thinking, I am turning 65 soon. That matters, but the tax year matters more. If you are not 65 by the last day of the tax year, this specific senior deduction may not apply for that year. It may apply in a later tax year if the law remains in effect and you meet the other rules. Before you take any step, there is one serious warning. Scammers often use new tax laws to create fake refund promises. The IRS warns that scammers mislead people about refunds, credits, and payments, pressure people for personal or financial information, and use fake links or threats. The IRS also warns that scammers target people over age 65 or nearing retirement. If someone calls you and says they can unlock your $6,000 senior payment today, be careful. This is not a separate payment. If someone asks for gift cards, crypto, wire transfers, account passwords, or your full Social Security number to release the deduction, treat that as a danger sign. The IRS says it does not make first contact through email or social media, and a letter or notice is usually the first way the IRS contacts a taxpayer. The IRS also says it will not ask for payment through prepaid cards, store gift cards, or online gift cards. The safest path is to use the official IRS website, official IRS forms, a qualified tax professional, or an IRS-supported free tax help program. Do not trust a random message that promises guaranteed money. Do not click strange links. Do not pay a large upfront fee to someone who says they found a hidden senior refund. There are also limits and unknowns to keep in mind. The IRS says this deduction is effective for tax years 2025 through 2028. That means the current law does not say it lasts forever. Future Congresses or future IRS guidance could affect later years. State taxes may be different from federal taxes. Your state may not follow the same rule. Your exact benefit can depend on your income, filing status, other deductions, and whether you have tax liability. And if you already filed, an amended return may help in the right case, but it is not instant. So bring this back to your own situation. The important question is not, can every senior get $6,000? The real question is, does my tax return include the correct senior deduction if I qualify? That is why Schedule 1A matters. That is why your age, income, filing status, and Social Security number requirement matter. And that is why you should check before filing or review carefully if you already filed. Today, the confirmed update is this. The IRS has an enhanced senior deduction for eligible people age 65 or older for tax years 2025 through 2028. The maximum amount is $6,000 per eligible individual or $12,000 for a qualifying married couple filing jointly when both spouses qualify. It is claimed through Schedule 1A, and it can be claimed by eligible taxpayers whether they use the standard deduction or itemize. But it can phase out at higher income levels, and it is not a guaranteed refund or new government check. Your most useful action is simple. Before you file, check whether the enhanced senior deduction applies to you. If you already filed, review your return for Schedule 1A before deciding whether an amended return is needed. Keep your records, protect your private information, and do not trust anyone promising instant senior money. If this video helped you understand the rule in plain English, share it with someone age 65 or older who may be filing taxes this year. Subscribe to USA Life Bulletin and turn on notifications for more USA tax, Social Security, benefit, immigration, and money updates explained clearly and safely.